Hey everyone, and welcome to another episode on the Joan Wick channel. Today I'm going to go over weekly profiles, and how we use them is to basically frame our potential reversal and expansion days for the week. So we know the phases of price, accumulation, manipulation, and distribution. We find those cycles or phases of price, if you remember, within our daily profiles. And we can do the same with weekly profiles. And the three main ones that I use, the first one is called the classic expansion. And what that looks like is price expanding during the week on these specific days, on the Tuesday, Wednesday, and Thursday. And so what's happening here is price is telling us a story. Before we move higher, we know that price needs to manipulate lower. And so usually our reversal day falls on the Monday or the Tuesday. And what you're looking for is price to sweep a 4-hour or greater PD array. That will be our liquidity sweep, creating the low of the week. So again, it's either the Monday or the Tuesday creating the low of the week, sweeping a 4-hour or greater PD array. And from there on, price will expand on the following days. And that's where we want to be entering trades, when price is expanding. And then price reaches our draw on liquidity. And that target is met either on the Thursday or the Friday. But most of the time we are focused on these three expansion days. Same with this bearish example. Price comes up, creates the high of the week either on the Monday or the Tuesday to sweep liquidity at a 4-hour or greater PD array, to then expand on the following 3 days and then reach its draw on liquidity or the target for the week on the Thursday or the Friday. So that's essentially your classic expansion profile. And the best days to trade during this profile will be the days after our reversal. So that's our classic expansion profile. So you might be wondering, what is this TGIF? Basically, TGIF gives us a extra opportunity that no other profile provides, and that is after we've created our expansion. TGIF gives us an opportunity for a trade if we maybe perhaps missed this expansion. What happens is Friday, after we reach our draw on liquidity, Friday will then retrace to about 30 to 40% of the weekly range. So if we had to measure the whole weekly range, the bottom on Friday would then retrace to 30 to 40%, and that gives us an extra buying opportunity if we've missed the bearish expansion, or a selling opportunity if we've missed the bullish expansion. So that is the whole of this profile. Our second profile is the midweek reversal. And what that looks like is price sweeping liquidity at the high on Wednesday, with the same idea, 4-hour or greater PD array, liquidity being swept. And from there, that allows price to push down, and that's where we expand for the rest of the week until our draw on liquidity that's met on the Friday. Same thing with the bullish example. We sweep liquidity at the low on Wednesday, and our draw on liquidity, price expands towards that and reaches it on the Friday. And then our last and final profile is the Consolidation Reversal Profile. And this, sometimes I'll refer to this as the Thursday reversal or the AMD profile. But it's essentially that. What price does is there's no clear direction during the week. Price consolidates. And once price breaks out of that accumulation, we manipulate to sweep liquidity on the higher time frame, 4 hour and above. And that begins our expansion through to Friday to reach our target draw on liquidity. Again, the exact same thing with the bullish example. We sweep liquidity on Thursday at a 4 hour greater PD array, and our draw on liquidity is that Friday expansion to the upside. Like so. And those are the 3 profiles I generally use every single week. And there are variations. These are guidelines to how price moves. But you can generally see that they do fit these profiles if you know how to look for them. So what I mean about these variations is sometimes Monday can throw things off a little bit for some people. And this is where correlated pairs come into play. So what I mean by that is sometimes you'll see that it's Monday that starts off like this. Instead of consolidating, we have a Judah swing day. And this doesn't invalidate the profile. It's just a variation. We are still expanding. We're still fitting the profile. This just means that Tuesday's liquidity sweep, that 4 hour PD array, rests within Monday. Same thing goes with midweek reversal. If we see Monday looks like this, just know that this is just a variation and that Monday is being used for a liquidity sweep for the reversal, so it still applies. Let me show you some chart examples to make it easier. This was February's price action, and I can tell you now every single one of these weeks, the February had a weekly profile. I've separated each day. You can see the labels on top, and every Monday is highlighted in gray so that we at least know the start of every week. So this is Monday, Tuesday, Wednesday, Thursday, Friday, and Monday again. So starting from the beginning of the week, I didn't trade this week, but we'll look at it anyway. From first glance, what do you think this profile looks like? We can already see this looks like the classic expansion. Why? We're moving upwards. See this bullish order flow? We expanded right from Monday. And what did Tuesday do? We go to the 4 hour. Essentially Tuesday swept 4 hour liquidity. The important thing is, if we want to spot the reversal on the day, we want to see a 1 hour or greater change in state of delivery. So you can see Tuesday we had a change in state of delivery, confirming this as a reversal, and from the next day we see price respect that bullish order flow all the way to our draw on liquidity. And where's our draw on liquidity? Well, it was these highs. You can see price reached our target on Friday. If you look there, that lines up with our classic expansion profile. And then what do we have? TGIF Friday. And what did I say that looks like? Price retraces on Friday to about 30 to 40% of the range. You can see price hits that target right there. So that's an extra selling opportunity if you've missed the entire buy week. So that's the first week of February, which was a classic expansion. If we move on to the next profile on the next week, what do you think this profile looks like to you? Well, this is our midweek reversal. Remember, sometimes Monday can be our outlier, where price will retrace to and look for a PD array within Monday. And I mentioned correlating pairs. So if we actually look at S&P during this time, we actually have an SMT, which further confirms our Wednesday reversal. So if it's hard to spot the reversal, just check with your correlating pair if you have an SMT or if the other pair is creating a different profile. Just make sure to check that. So if you look at this example, having an SMT at the low, this removes the requirement of a liquidity sweep, but does confirm that this is a reversal. So just remember that the weekly profiles are guidelines, so you will see these variations. So here you see price has a change in state of delivery, which confirms that we have a reversal on the Wednesday. Remember, we want to see this change in the state of delivery on the 1 hour time frame. And so from there you can see price respects the bullish order flow, and we continue higher until price reaches its draw on liquidity. So that's two profiles already showing up on the first 2 weeks of February. So if we look at the following week, this might be a little confusing. I know it confused me during that week as well, but this is the importance of correlating pairs. So you see, at first glance, this might look like a consolidation reversal profile, but that's not the case in this example. What we don't see here is our correlating pair S&P creating the high of the week on Wednesday. And you can see here we did not make new highs on Wednesday. And so again, we have another SMT here, because on S&P price made a higher high on Wednesday. And now knowing this, what profile does it look like now? A midweek reversal profile, right? Price sweeps liquidity on S&P here, but creates an SMT on Nasdaq on the Wednesday, and from there price just pushes downwards. And some of you might say, but Tuesday is the high of the day, why is this not a classic expansion? Well, that's because we are not expanding from Tuesday onwards. We're not expanding. We're still in this kind of range on Wednesday. Only from Thursday onwards do we start seeing these large expansion candles. If this were classic expansion, we wouldn't see Friday pushing down like that. This would be the weekly range. Price moves way past our 30-40% range and then continues down further. So no, this would not be a classic expansion because we don't even have a TGIF entry. So just bear in mind there will be some variations like this where it's not always clean to see, but just make sure to look where price is sweeping liquidity, where price looks like it's reversing, and make sure that matches up with your correlating pair, because on one side we could have one profile and the other can have a different profile, and that happens as well, where Nasdaq creates a classic expansion but S&P creates a Wednesday reversal, and that's perfectly fine. You can use them to confirm each other in terms of the direction of the market during the week. So moving on to the next example, this was the last week and the best week for me. If you followed along, you'd know that this was a classic expansion downwards, specifically like this example here. A price expanded through Tuesday to Thursday, even on the Monday, and then we had a TGIF entry on the Friday. That's exactly how I was able to catch the best buy on Friday. So you see price just expands down, and sometimes it happens that you can have the wrong bias because Monday throws you off when you're trying to read the profile. But luckily with the classic expansion, there is one last opportunity for a retracement position, and so you can see that measuring from the top to the bottom of the range, price went and retraced to at least 30 to 40% of the weekly range on the Friday, and that's our TGIF. So yeah, there's one profile that I have not mentioned yet, and that's the consolidation profile. And I'm trying to find an example, and this is somewhat looks like an example right here. You can see price, ignoring Monday, you can see price consolidates, creates the high for the week on Thursday, and then just expands downwards, reaching its target, which is most likely PD array on Monday. And that is essentially the profile. Yes, Friday moves up. Just remember that we can reach the target on the reversal day as well. So if the target is already met for the week, expect price to either continue or stop moving in the opposite direction. And there's a lot of tools you can use to see if price has met its weekly target. Remember, I made a video on standard deviation and how to measure that, so go check out that video. Essentially, these are what weekly profiles are used for, to essentially kind of frame the order flow for the week. And this is extremely useful if you know how to read the economic news calendar. Knowing which days to expect volatility in terms of the news calendar really helps you to frame the expansion days for the weekly profiles as well. So I hope this video has been helpful. Please comment, like, subscribe. Let me know your thoughts on the content so far. If there's anything else I should be covering, let me know. Otherwise, that is essentially the formula for weekly profiles. Look for where price reverses, sweeps liquidity at a 4-hour or higher PD array, or creates an SMT. Then we have a change in state of delivery on the 1 hour, and then price just expands until it reaches our weekly target. And yeah, that's it for this video. See you guys in the next one.